from where I sucked at this in 2019 and what I've done since and what I'm projecting roughly for balanced lows in 2025. I've hit as high as 3.6 million in net worth recently here about a month and a half ago. It's down a little bit since, but it's recovering quickly, and I think Bitcoin's getting ready to explode. But can you guys just confirm in chat that everybody's here, or that there's somebody here and that things are working? But I'm expecting Bitcoin to take off. We can look at that in a little bit too. But really the gist of today's video is to help you guys understand some of the indicators that I've used in order to be able to do this and kind of walk through them. I posted this on X, but I wanted to talk to it too. The first one is the MVRV Z-Score. And this one I love. Let me just read the description of it. It evaluates whether BTC is overvalued or undervalued relative to its fair value. Instead of using traditional Z-score method, the MVRV Z-score uniquely compares the market value to the realized value. When the market value measured as a network valuation by spot multiplied by supply is significantly higher than realized value represented by the cumulative capital inflow into the asset, it is typically signaled a market top in the red zone. Conversely, a significantly lower market value than realized value has often indicated market bottoms in the green zone. So that's a lot. That's a big word salad, right? And I'll get to chat in a little bit, guys. I just want to make sure that I'm rolling through this for people that might be new. And if you guys could like and share, it's greatly appreciated. I want to get this out as much as possible. Should be rolling live on X right now, too, as well. But we'll look at this first chart, and then we'll go over that. I put note, this is one of the best tools I've found for cycle bottoms, but is less useful for finding the cycle peak without being utilized along other metrics. So we'll look at the chart. Okay, so let's start with this first one. I'm going to go ahead. I'll zoom in. So one of the things I wanted to point out here, so you can see what we're talking about here, right? You see the green zone at the bottom, you see the red zone at the top. If you look at the green zone at the bottom, when we've hit that and significantly dropped into it, you can see where the bottom was. So you can get really close to where the bottom is for a cycle. You can also see that over here. If you would have jumped into this right about here, you would have been super close to the cycle bottom, or when you see it get about midway or whatever, you are at the bottom. And it hangs out here for a while. You can see this in the 2017 cycle represented here. If we go back over, or I'm sorry, that was the 2015 bottom. And then if we go over to the 2017 top, you can see again where it goes deep into the red. Not so helpful with the tops because, again, it can overshoot decently, and it has had diminished returns over time. But on the bottoms, it's spot on. If you look here in 2019, that time where I wasn't doing so good, down here in the bottom left corner, you could see that it did a great job perfectly calling the bottom, perfectly calling in the 3000s. You can also see over here in 2020 when we had a mid-cycle correction. This was from the pandemic, correct? So you could see where this again was a very, very strong buy zone where you would want to accumulate more. We knew that we hadn't topped though because again we got nowhere near the red zone. Now if we look, you'll see how the MVRV Z-score did a great job marking the cycle top. It got into the red zone. It actually did a good job reflecting that. Now, I do believe that what we would have done would have been more traditional. It would have been up into the higher ends of this to mark the top of the cycle this last time, except the Fed right here raised rates at the most aggressive rate in history, and that just crushed this. So again, there's anomalies that can occur, but this cycle we've got the opposite. We've got the Fed lowering rates, potentially at what will be one of the more aggressive rates in history. We also have tons of China weakness, global liquidity firing off. Anybody who follows Michael Howell or that has listened to me talk about Michael Howell knows how well that's doing. Also, Lynn Alden has great metrics on this as well. But you could see where we were neutered on the top. We never got really to that strong cycle peak, mid-level, upper level, breakthrough level. We just touched it. We just glanced it and then retraced back down. But again, if you would have over here in 2022, if you would have bought 2022 to 2023, if you would have bought down in this zone, you would have gotten perfectly in at the lows and you would have done really well. Now, one of the things I want to reference here isn't just this. It's not just this chart. This is a good one, right? Like this isn't a horrible chart, and it did a great job finding the bottoms. But there's more, guys. There's so many other charts that we can use. There's one called the Puell Multiple. This one I especially like it for confirming tops. But you have to use a trend line to get a better gauge of where the top might be, as the red zone is not always hit and seems to have a miscalculation in the equation. Now, this is my proprietary method for it, right? It says the Puell multiple is calculated by dividing the daily issuance of value of Bitcoins in USD by the 365-day moving average of daily issuance value. This metric was created by David Puell. So here's how I use it, right? So the bottoms, again, it did a pretty good job on bottoms as well. You can see over here where we marked the bottom in 2011. You can see over here where we marked the bottom in 2015. You can see over here where we marked the bottom in 2019. You can see that temporary bottom from the pandemic. You can see again where we marked the bottom, or at least close to it, right over here in 2023. And then by the time we were hitting this for a second double dip, you knew it was the bottom. But the tops are more impressive, at least if we go back over here. This first one, there's so much anomalies in the first data, guys, when Bitcoin was initially being created. You kind of have to ignore this first tranche right here because the signal was so weak. And again, I'll get to comments, but it'll be later. But if you look over here, you can see the top, how it had shot through the red, but then we went down into the green zone for the bottom. Then we went up here perfectly to the top on both of these, the mid-cycle pump and the full pump. And then we went down to the bottom, and then we went back up to the top again, and then we went down to the bottom, and then again, a little bit of a rocky road with the pandemic. We never got up here, so you knew we hadn't reached the top yet. But again, another great buy zone was had. We knew that was coming. Then you can see the top over here. I do actually think what would have happened, this would have happened, this right here, indicating a strong buy. And I think if the Fed wouldn't have raised rates at the most aggressive rate in history, we would have actually went up here again to establish at least 100K. Probably right around 100K. That would have been a solid number, just like 20K in 2017 was hit. So I do think that would have happened. That would have happened right here, again, signifying another almost perfect trend line touch point. But that didn't because, again, the Fed got crazy and stupid. But we got to the bottom down again, and then again, perfectly here on the short-term top, which I believe was the mid-cycle top. So this is one of my favorite for trying to figure out if we're overbought on Bitcoin. And I say this all the time, guys, and I hope you guys realize this. If Bitcoin goes from 15,000, where it was for this cycle bottom, if it goes from that and we get up to 180,000, 200,000 plus, and you're waiting for that 500,000 mark and you don't sell, I think that's a bad idea. Maybe. There are other things that you should pay attention to too. There's actually strong evidence that when the cycle does top, there's a strong drop, maybe 30% plus, and then it goes back up and hits a lot of its median level too. So there's two ways to tackle trying to time the top. I prefer to at least be 50% out by the time we get a top indicator, maybe 75% out. Because if you that way, you know, even if you don't get it, you've still got money on the table, you're still making a return. But the important point to note, what I'm trying to get across to you right now, is that it is way more important to get the 10x from 15K to 150K than to get the last doubling, the last double. Because think about it, if you get 10x, why get greedy trying to get that last 100%? When you could have it drop 60, 70% afterwards over a long period of time. So again, you know how I am, guys. I dial out of the multipliers when we get to the top of the cycles, and then I get out when I feel like we're at a zone where we're going to peak. And I do believe 150, 180K is probably a good one to get out of. I do think the ultimate target to the upside, though, is probably closer between 250 and 280. So again, I like to be conservative on my approach for leaving, but this is the Puell multiple. It's one of my favorites. Let's move on here. This next one is the Pi cycle top. I say this is another great one to try and confirm where you're near the top of the cycle and has a great accuracy going back to 2014. When the aqua color gets overlapped or above the light purple, you're in the danger zone based upon historical patterns. The Pi cycle is an indicator. It's composed of a 111-day moving average and a 2x multiple of the 350-day moving average of Bitcoin's price. This metric shows when BTC becomes significantly overheated, the shorter MA moving average reaches the levels of the larger moving average. And it's historically been a good indicator for cycle tops. This metric was first put forward by Philip Swift. Thank you, Philip. Now, if you look here, you can see it. And again, it's got the same kind of thing. You can see where when it overlaps, like right over here, right here in 2013, when you saw this, that was a great indicator that you were probably in the cycle top, and you could use these other indicators as a confirmation of that. You can see the same thing over here where, again, rapid growth to the upside. It hit that. It was time to get the fuck out. You can see over here right here, 2017, that it almost perfectly marked the top. You could see over here that in the mid cycle, it didn't come close to it, so we knew the cycle wasn't over yet. You could see over here, actually in 2021, that it started to overlap, and that would have indicated, regardless of the Fed's decision on rates, it would have helped you perfectly time the top of this last cycle and get out. So even if you don't have the thesis I have that the last cycle was neutered because of the Fed raising rates at the most aggressive rate in history, you still would have gotten out at the right time using this one. And if you would have got out by 75% here, this thing dropped over 35% down. If you would have bought that bottom and then it went back up and then you sold out here and then bought down, you made so much money, guys. There's a reason why I've gotten so rich. And again, for people who don't know who I am, I'm a high school dropout. I'm nobody special. I'm pretty good with analytics and data. I didn't accomplish much in my regular working day life, but I was in the technical fields, support-related fields, analytical-related fields. I was kind of a jack of all trades, and I think I have a unique ability to be able to look at things from a lot of different angles. But I was able to retire at the start of a pandemic, and I did that bravely with only $375,000 in my investment accounts. But I had a low amount of debt. It was very sustainable, and I had researched enough to understand how Bitcoin was going to work in the cycle ahead, and knowing that Tesla was going to be good, and that I could divest myself from work and do this full time, and that's what I did. And that's what helped me over these years get better and better and better. And then over my time of being retired since the pandemic, right about over here, again, this was the low. It says 164, but by the time I had done it, it was about 375 because the Bitcoin cycle was doing pretty good already after the pandemic fired off just a few months later. So, but the whole point is, again, you can make a lot of money. You got to be smart about Bitcoin. You can't be too greedy. And you need and again, anyway, this is how I was able to accomplish this. And since the pandemic, I've added other tool sets. I had lost money in options years ago in the 2008 great financial crisis, but I've learned how to do them really well since. And then I've also learned macro. I've learned just about everything you can about financials for companies and how to assess them, geopolitics, all kinds of stuff that I've added to my tool belt over that time. But again, Pi Cycle is another great one to look at. There is another one I was just going to show real quick. And again, there's more than this. This is just the stuff I'm working with right now. And there's more that I could show you guys. But I'm trying to get you a feel for, hey, maybe we'll have some indication with some degree of accuracy on when the cycle is topping and when it is bottoming. And we can feel good about that. And we'll refer to these things on the weekly. In the Bitcoin mining comparison video. I'm going to be doing one tonight at 6 o'clock. Obviously, probably not going to spend too much time on it this week. But there's a lot of other great stuff coming too, guys. Real quick with the channel before we go into this one. I'm updating my portfolio on X today with my portfolio allocation. I will be adding soon a portfolio allocation image as well. So right now I have, let me just show you guys this. So I'll get out of this. I have this that I've been sharing. I'll be updating my allocations today, but I show basically what I have for investment portfolio allocations so that and I update this weekly so that you guys kind of know where I'm sitting. The shitcoin section, I'll be updating that to be its own image that I'll be including in here as well. I'm going to be I'm switching to Brave today so that I can hide advertisements that come up on some of the screens that are super annoying. I'm going to be using something called Descript to generate chapters in my YouTube videos that you guys will be able to more easily follow those. I'm going to try and get that implemented today if I can. I'm sending a list over to Alejandro for the people that know some of the tools I use. I use a site called visualstocks.com that you can look up financial information in a very visual way in order to be able to determine, whether a company is a good investment. He's going to be adding with some of my suggestions here, Bitcoin miner comparison chart as well. And I'll be adding a bunch of data down here below, not just bar charts, but like pie charts and other things that will give us really good visuals that we'll be using on the weekly within the Bitcoin miner comparison videos that we do. I think right now on Sundays at 7 p.m., but if there's a better time, we'll figure that out. Also, I'm going to be working on adding a Patreon and Discord. The reason I'm doing that, I've talked to people on the channel already. I'm trying to divest from being dependent upon YouTube, since right now I have over 1,200 people that are members on YouTube. They take a lot of money from creators. It's 55% for the ad revenue. So they butcher us pretty badly. With members, I believe it's lower. I've got to do the math on that. But I do want to divest because I don't want to be dependent upon their censorship. People that have been here a while know that I get censored quite often, especially if I start talking politics, of which, not everybody loves politics. I try and keep it mostly in a separate video. For the next 7 weeks, it will probably be in everything. But I just can't help it. It applies to everything, whether people realize that or not. But I don't want to be censored. I don't want to be, depending upon the election, depending upon how things head in the future, I don't want to be dependent upon a platform that takes advantage of creators. And that's what I feel like happens. So people like Matthew Polak, who just joined as a member for as little as, I think, $2 for the starter pack, you get to speak in chat and ask during the morning shows that we do, the market open, and then also at the market recap at the end of the day, Monday through Friday. You get to ask about stocks and have me look it up with the financials, talk to me about the fundamentals and what I might think, and then also I look at them from a technical analysis standpoint using TradingView. So that gives you an opportunity to do that if you want to join. But again, I will be trying to move some of that to Patreon and Discord, and then I'll probably just have a $1 fee eventually on YouTube. Hey, Matthew. What's up, buddy? See, he's chatting right now. So then I'll have a $1 fee on YouTube and probably X and any other platforms, because I'm looking at streaming potentially to 12 different platforms to increase the audience size. So I'll try and get some of that, and I'll try to provide value in those as well, to where, again, we're growing as a community. This isn't just the me show. There's already brilliant people in here that I talk to daily and that you'll see inside of the chat that help us out a lot. And do some of the heavy lifting for me as well. So we're going to get bigger as a community and stronger as a community. And I'm not going to charge an arm and a leg. I'm talking like $5 to $10 a month for the input and the analytics. Also, too, I'm going to be adding my crypto positions to Crypto Bubbles on the favorites tab over here. I think I got most of it in there already. So in the future, when we go in here, let me see. I don't even know how to trigger it. Maybe it's over here. Nope, that ain't it. Maybe it's over here. I don't know where it is, but it's like a favorites list. I'll figure out where it is and I'll display it. But yeah, so I've got my portfolio that we'll be able to visibly see really quickly in here too. Yeah, I think I said everything I was gonna say. Let's keep going on here. I love you guys. I appreciate you guys. Everybody that supports me. I'm gonna work hard over the next year, especially because I believe it's gonna be a very turbulent next year when we look at everything that's going on geopolitically. Politically within our own country, the very differing views on how we're going to move forward, whether it's capitalism or something else. And I think we're all going to need as much help as we can get from each other in order to be able to benefit from our investment ideas and just hopefully benefit as human beings. Anyway, so again, net unrealized profit loss. It's the NUPL, whatever. I said I also like the net unrealized profit loss as a way of confirming tops. Bottoms, not so much. Note, this indicator usually peaks out near euphoria, but I believe strongly that the last cycle was neutered prematurely by the Fed raising rates. Yeah, whatever. I said that a bunch. And so that we never hit that euphoria stage. And you can kind of see that down here too. I said it's a great tool. I said it was a great tool for getting you right near the last part of the cycle. And a more cautious person would have jumped out around the 60,000s level. However, since this time around, we should be looking towards liquidity expansion and rates lowering. I would expect to see some of the stage. I would expect to see some of this stage have no problem occurring. That's some weird wording, but I would expect us to be able to get to euphoria this time around pretty easily, which again is this blue indicator down here. So between this and then again the profit loss that we were just looking at, I think and all of them, and many more, we're gonna have a good idea where the cycle top is. I feel like, and hopefully you guys will gain confidence in that too as time goes on. So anyway, if you look here though, you can see how there's kind of a trend line here too, right? So you can see how it hasn't hit quite as high. This last time we didn't hit it, but I do believe we would have hit it right over here. But again, the net unrealized profit loss would have actually got us perfectly out over in the 60s, irregardless of what the Fed was doing. Now, I do believe that this time around we'll probably hit over here too. So if we get near this level, I'm pretty out of my allocation, just so you guys know, because I don't fuck around, man. I don't fuck around. You guys know this. There's no sense after getting 1,000% returns fucking it all up because you got greedy and wanted 100% more. I just really strongly want to say, guys, you've got to think this way. Real quickly, let's look at Bitcoin today. We're not going to make this too long of a video because, again, we're doing a Bitcoin miner comparison chart later. But I do want to say a couple of things here. So on the daily, we've got a higher equal to higher low right here on the RSI, then a higher low here, And it looks like what we're going to be doing is testing 70 very quickly. If you look at the dailies on Bitcoin, some of you guys who haven't been here that long, the dailies on Bitcoin can get stupidly overextended, getting into the upper 80s and even the 90s. If you're in the 90s, on Bitcoin, it's usually get the fuck out kind of moment, especially if you're looking at that on the weekly time frame. I just want to show a few things here real quick. So, and again, I look at everything over long periods of time, guys. I do. It's just the way my brain works. I try to look at things through every angle humanly possible. And there's definitely a thing going on here. If you look at this, there's definitely perfect levels of support that have been accomplished previously, going all the way back to 2018. And then we've got an obvious trade range. Again, I think it might have been a little bit higher. So I think this top resistance zone is probably something that is pretty conservative in nature. And I do believe personally that we're going anywhere, again, between 150,000 and 280,000. That is my target for this cycle. But I digress. Let's go back to the daily. So what I'm trying to say here, I did want to show one thing on the weekly, sorry, is that weekly time frames, look at this, 87. Look at this over here, 91. Look at this over here, repeated times of getting into the 80s and then the 90s. Now, I feel like this cycle could be a little bit like this, depending upon global liquidity and what's going on geopolitically and how strained the markets are. And if we could still top in 2025. There's a lot of things that can happen, but we're going to use all of our indicators to figure out the truth. And I will get to comments in a second, guys. I do apologize. I'm just trying to be as fluid with this as I can for anybody who might be new here. So again, I think there's room to run here. We're not even close to 70. We can go a lot higher. We can go into the 80s. We can go into the 90s. You can see over here that we're perfectly finding, if I zoom out just a hair, forget about the RSI, forget about the MACD. We are finding support over here on the 50 moving average. Our next move, I believe this weekend, will be to go to 61.5 and to test that level. Maybe even go higher. You can see a lot of volume up here, this little volume shelf over here on the visible range volume profile. So maybe we stop right around here, 63.8, 64 range, right around the 200 moving average. I think we could do that this weekend, at the very least early next week. And so I think by the end of next week, we probably tested 65,000, which is this next fib extension level. And so I'm very excited about this, guys. We're not far away from literally being in some major breakout turf. You can see this resistance zone up here. You can see that we were in a descending broadening wedge. You can see that we've established our first higher low. There's just a lot of positive things going on right now with Bitcoin. And again, if you appreciate what I'm putting out, guys, like and comment, talk and chat. Everything you do helps the algo. Share this on different sites, Facebook, share it on X. Please share this. Let people know that this is going to be the greatest community or one of them. I want this to be, it's going to be hard to beat James from Invest Answers. I love him. He's such a great guy. You guys don't get to see this, and I won't show you personal messages, but he literally helps me, gives me advice, gives me encouragement. I don't know a lot of people that are YouTubers that have 500,000 subscribers that are that kind to other people. So he's like a hero to me, man, and he's definitely somebody I admire and look up to for inspiration, and I appreciate his mentorship with what I'm doing. But I would be ecstatic to be even close to his level in the future and have a community that is as great as his. And if you haven't joined he's got a Patreon too. I think it's as little as $8 a month, and I find it incredibly valuable. So I would highly encourage you guys to use that too. But let's get to chat here, guys. Rumi, me Kevin is the indicator. He's been constantly wrong the past couple of years, almost competing with Kramer. See, me Kevin, I love me Kevin. I actually think I have a love-hate, I should say. I like him. I think he's a really great guy. I love what he's trying to do. I don't believe that he has the knowledge in investing, especially Bitcoin. I don't even think he understands the premise behind Bitcoin and why it's so valuable. I don't think he understands global liquidity. I don't think he understands a lot about markets, but I think he's doing a rehearsal and learning while pretending like he can. And the fake it till you make it thing's okay, but when you're giving non-financial advice, read my disclaimer down below. I think it's important to realize the impact that it can have on the people that follow you. That's my focus, and what I try and spend my effort on is understanding the impact I might be having on you, and making sure that you understand the lens I'm looking through, and the level of confidence that I have in everything that I say. I think that's super important. If you don't have that, man, I don't think you're doing a good job. Um, I don't think you're doing a good job. And if here's the thing, real estate. If I get bigger into the real estate game, which I'm planning on doing in the next year, I will definitely be watching more Meet Kevin videos, because I think he's brilliant in that. Everybody has their skill sets, right? Anyway, let's keep rolling down. I might have missed a few of you guys at the top. If so, I do apologize. Let me just try. I'll try and roll through all of them. Good morning, Jesse. Everyone hit the like. Yes, Justin, please do that, guys. Elmos Racing, good morning. Dylan, oh, come on, Jesse. It's 11:30 p.m. I don't know where you're at, but that sounds pretty late. um, Polos Bro, hey, Jesse, glad to be back after 2 long weeks of vacations. Yeah, dude, I was wondering where my favorite chicken went. But vacation sounds like a great way to spend that time. Johnsonville, my friend has the ability to become a whole coiner at the expense of not being able to play Tesla, PayPal miners, only very lightly. He's not sure what to do. Man, if he's new to stuff, I don't know that getting into options is a great idea. Again, I've made a lot of money off of options, but I also went bankrupt in 2008 from not knowing what I was doing with options, and they're dangerous. If you don't have time to touch this stuff every day, I would stay away from that stuff. I would invest in Bitcoin. Maybe proxies like MicroStrategy is a very simple choice. It gives you a multiplier to the upside of roughly 2 to 3x the underlying, which is Bitcoin. And the thing I love about MicroStrategy is you can get MSTX, and it's a 1.75 multiplier of that. So if he's going to apply multipliers, I would keep him out of the options plays for things like Tesla and PayPal right now that I'm doing. And instead, I think he should be doing Bitcoin via something like MSTX, where he's getting a 2 to 3x multiplier versus the underlying just with MicroStrategy. And then he's given himself a little bonus multiplier of almost 2x on top of that. So he could get 5x Bitcoin's returns potentially from that. Very simple play. Probably one of the easiest plays to make right now. I might be overcomplicating things with Bitcoin miners, but I like to play around, and I like to be diversified. So I'm doing this from a multitude of angles. But again, that might be a really good play to make. But remember, with MSTX, if it's giving you a multiplier, it's got something called theta decay, where it loses value over time. So you won't necessarily get the 1.75. Maybe you get 1.4, maybe you get 1.3. And so really, maybe some of the other miners do outperform. Let me see. Would be 80% of his portfolio. He's a young guy. Would love to be a whole corner. Again, I'm not a financial advisor, but if I was that guy, I would do something like MicroStrategy. And then again, when we start to feel toppy, maybe around the 150 range, he should divest and go back into Bitcoin and or have some cash, have some bonds. I think bonds, if Trump becomes the president, I think bonds will actually be the best play if we head into a recession, of which the government will want to do because they need to get people back into bonds so that we can pay for our debts. So I don't know. That's kind of my thought process and game plan. Swarmy Robots. Hey, Jesse, really enjoying the new Sunday show. Thanks for the info. Good, man. I'm hoping this isn't even the Sunday show. This is just like me ad hoc and something. But tonight at 6 p.m., we'll be doing the Bitcoin miner comparison, where we'll be going into more on those, on the latest news of each Bitcoin miner, and talking over some analytics. I might borrow some of the work from James from Invest Answers temporarily today until we can get some more visual stocks done. I'll just glance at them, but I also use it as an advertising. And Sebastian Ski, can't forget him. Some of the greatest analytics out there too in regard to Bitcoin miners. Highly encourage people to join their Patreons. They're both great, or at least subscribe on YouTube. I think with Sebastian Ski as well. Support these people. They're making our lives easier. So support them. Hey, all right. Justin says if your average is 15K though, wouldn't that last 50K increase technically be another 3x return? So here's the thing: judge it from where you are at that time. If you've made, let's say this: if you went from 15K to 150K, you've made 10x, right? You've 10x your return. You've made 900% in returns over that period of time, right? So let's just start with that. The 900% in returns, do you want to jeopardize a huge portion of that with that last 100%, that last doubling? That's the way you should look at it. That's the way you should look at it with every investment. That has saved me a lot of money over the years. That's the way I would look at it. But again, you do you, man. Everybody's got their own. All right, Justin said, not questioning your thesis because I agree that you should chase the loaf of bread instead of breadcrumbs. Yes, agreed. So hopefully that makes sense to you, dude. Again, Matthew joined as a member. Thank you, Matthew. Again, joining as a member gives you the ability to talk in chat and ask a bunch of questions, including financial TA and looking at financials and talking about fundamentals. Rumi, what's your 3 highest conviction miners? In order, please. Clean Spark. Well, it's hard to say, man. Join me tonight in the Bitcoin miner comparison. We'll talk through it there because it's a longer answer and I don't want to take up time here. Rumi, but join me in that one. Ask that same question, and I'll give you a long ass answer to it, bro. Mark LeBlanc, when Amit gets stoked about BTC, I'll sell it all. Yeah, he's new too, but Amit is such an awesome dude. I love him. He's one of my favorite YouTubers. He's really working hard, man. Nobody hustles quite the way he does. Rumi, meet Kevin is the indicator. Okay, that's the one I got earlier. Let me see here. Mark LeBlanc says he has such a special way of displaying his irrational over exuberance, double cowbell, sell. Oh, you're talking about me, Kevin. Or, oh, you are talking about a bit. Which one are you talking about? They both have a, do they both have a cowbell? I mean, they both kind of do stuff like that. You're going to have to clarify, Mark. I do remember cowbell being rung for PayPal, that it was breaking up higher, and that didn't work very good on Amit's channel. That's like a legendary thing. Adam was on there, and you could see Adam's face just get sadder and sadder as that went on. That was definitely an epic moment. Chicken Bro, I think we should add weight to all the social indicators for an overall score. So social indicators are a great one. There's actually tools with that too, so we can go over that stuff too as time goes on. Mark LeBlanc, Mr. Bonkers. Jaden, we love James. Yes, we do. Al Moss Racing says James is amazing. Totally agree. Matthew Polak, what target are you looking to start selling your CleanSpark calls? We will talk about that tonight in the Bitcoin comparison video. So bring that up then, my friend. Marty McFly, my CleanSpark January 2026 calls doing a bit better than July 2025. Yeah, July 2025 is, well, oh, okay, that's always going to work that way. Marty, you're always going to work that way because you're trading, when you have shorter time frames, you have a higher multiple of upside return and downside risk because it's a shorter time frame. If people haven't watched my Options 101 video, watch it. It does a good job of showing extrinsic and intrinsic value with options. I've been told it's the best option video out there on YouTube. I don't know if that's true, but I like to think it is. Chicken Bro, how awesome would it be get BOTG, Jesse, and James on stream talking about Bitcoin? That might happen in the future. So James asked me a long time ago to be on his stream. I turned him down. I had Mario Knopfel. I had James. I took a couple of smaller ones, like smaller ones. I mean, Tom Nash has like hundreds of thousands of people. And then another one, Rex. Well, no, not Rex Finance. Lex. God dang it. His name escapes me right now. The blonde guy that lives in Hong Kong. I don't know why I can't think of this right off the top of my head. Felix. Oh my God. Rex, Lex, Felix. I was on his. I think he has like 130, 150,000 now. But I was, I don't know. You guys got to realize I dropped out of high school because I was afraid of speech class. So it's taken me a while to get to where I am today. In this last year, you guys forced me onto YouTube. I went from Facebook to X because I was tired of being censored every time I talked about China on Facebook by Chinese bot farms. Then I came to X. Then you guys told me I had to do YouTube. Then you told me I had to show my face and I had to get better audio. And now I'm here. I don't know what the fuck happened. But it's your guys' fault that this has all happened. And one of the reasons why I've got a much greater confidence speaking about these things than I used to in front of a camera. And so if James still wants to do that, I would love to have an opportunity to hang out with him because I think he's one of the most brilliant analytical investors I know of. And I hold him in very high respect. And hopefully I could provide value in some way. Tezos Ma'am, maybe when you get more involved with the real estate, you could make video about it as well. Our interest, the hold for long-term flip sell. I think just getting the appreciation off of them is good, but I do think that the appreciation levels that we've seen historically are going to diminish because I think more people are going to use a vessel like Bitcoin to store wealth. I know a ton of realtors and rich real estate investors that are starting to do more of that because it's just easier. They have to worry about the cycles, so they have to time it right. But it's easier to liquidate that than be stuck in something that's physical property where there could be a market downturn and you're just stuck in it. and you potentially have debt related to that as well that you got to service. So I don't know. I'll definitely be in real estate. Happy to make videos and talk about the stuff. But I do think that game is going to change. Marty McFly, could you move the mic a bit closer? Is it low? I'm trying to figure, yeah, see if I get it too close. I'm trying to figure out the right levels to where I can get it to where I can like talk. You guys can hear it. It's not too crazy. It's not like right up in front of my face. So hopefully I can get it better. Hopefully. All right. Mark LeBlanc, too legit. Admit Kevin isn't cowbell. Cool. No, he's not. He's got other shit. Jaden, how do you feel about end phase coming into election season? If Kamala Harris wins, it could bounce. If Kamala Harris doesn't win, it probably won't. I hope it doesn't bounce. Marty McFly, doing great, Jesse. I'm scared of speaking to crowds too. I hate it. Yeah, man. It's weird. It's weird, but I've gotten over it quite a bit, and it's helped me in IRL too, right? It's helped me in the real world. It's really weird. I just don't. I used to give a fuck. It also, again, when I retired in 2020, right after the pandemic had started, like 2 months after it, I had maybe 3 months after it, I had a lot of fears and things going on, but I also read The Art of Not Giving a Fuck. I read The Art 5-Hour Work Week. That actually, the 5-Hour Work Week was earlier, and The Art of Giving a Fuck was before I retired too. But that allowed me to be able to say, hey, you guys want to give me a pay cut at my job? I told them, hey, you guys want to give me a pay cut, and instead, I'll cut it by 40%. Business is slowing a little bit anyway. And this place isn't even around anymore, or at least not in its previous form. And I'll still do everything that I needed to do, and I'll make all the stuff happen. So I dropped myself from over 40 hours a week, 50 hours a week, down to 10 with a 40% pay cut. That's pretty good math, in my opinion. That was from the 5-Hour Work Week and The Art of Not Giving a Fuck. And I just learned how to not give a fuck more and more every day, and now I'm here. So it can happen for anybody, guys. I was such a pussy that I dropped out of fucking high school because I didn't want to speak in front of a crowd, and now I'm here. So I think that speaks to everybody's ability. RJ Cohen, real estate is great for leverage. Have tenants pay off your mortgage, create wealth, then move gains into BTC. Oh, totally. I think when you look at real estate, if you get revenue from it, cool. But outside of that, it's if you have real estate in the right places, it's appreciation where you make a lot of the value, and the tenants pay the mortgage while you gain from the appreciation. So I totally agree with that. I just think it might change a little bit in the future where the appreciation. Housing is unaffordable for a number of reasons. We won't go into illegal immigration, but it's unaffordable, and I think that will become more affordable. And I do believe the primary tool that will help make it more affordable is embracing Bitcoin as a store of value across the world. I think society will do that more and more and more. We already know that Bitcoin is growing quicker than the rate of the internet. I expect that to continue in the future here too, guys. And if it does, we're gonna see the appreciation rates of other things, other stores of value, like real estate, something that's less liquid. We're going to see the return rates get lower. That's my belief. And I think that's good for humanity. So that's my thought process there, RJ. And RJ is one of the best people on this channel. He throws out free memberships all the time. That's not a cue to do it now, RJ. But he's just been incredibly supportive of me and my work, probably the most out of anybody that contributes right now to this channel. And so I really appreciate you, RJ, and your input. All right, guys, I think for now, we've covered what I wanted to cover. Again, we have a lot of other tools that we can use in our tool belt. We're going to be going over more and more of these in the Bitcoin miner comparison videos at 7 o'clock Central Time weekly. And so we'll recap and let you guys know, hey, which miners outperformed, how's MicroStrategy doing versus the miners, how is MSTX, is that the better investment than being in the miners, even with options plays, what's out there. We'll just talk about all of it, all the latest news events. We'll go through all this stuff. Again, so we're probably going to finish up here. I really, like I said, I appreciate all you guys. If you could hit the like, do all those things. It is huge for a channel like mine in order to be able to grow. And if we grow, we get more people like RJ. We get more people like Silas. We get more people like Disease Kodak. We get more people like all of you guys, Marty McFly, my chicken bro, all you guys that provide value with your comment and with your insights. So please do all those things so that we can grow and become smarter and better. This shouldn't be the me show. My wife doesn't care for the me show. I don't think anybody should care for the me show. we should work together to become better people in our investments and in life. Marty McFly says, thanks. See you tonight. All right. See you, buddy. So we're gonna go ahead and kill it right there, guys. I will give you some music to listen to. For anybody who's new here, this is one of my favorites. This is from Tip NZ. She's a sweetheart. And it's her view of what the future can look like with Bitcoin. And I believe it's a beautiful one. And I'm very excited for it. And I hope you guys can enjoy it here too. All right. Peace out, guys. Let me get this here.
With time, a seed becomes a tree, sheltering us. With time, a skill becomes a talent, empowering us. With time, a technology becomes a tool, enhancing us. By nature, time gives value to almost everything, yet the very thing our society gives value to, our money, loses value over time. This paradox warps our reality by defying the laws of nature, and it stems from the belief that $1 today is worth more than $1 tomorrow. Meaning money must always lose value. We built our reality off of this model. Time value of money, we call it, but in reality, this is just dogma. Since we can keep making more of it, we end up destroying our own purchasing power. So we put it in stocks, put it in bonds, put it in land, put it in funds, put it in crypto, put it in gold. But we are not oracles, so what do we know? We know that it's hard to get by. We know some people may never retire. Is time value of money a lie since it discounts the monetary value of our time? If time is money, how are they moving in different directions? We're working longer for less, we end up just giving away our freedom. Give up liberty for policies, give up our agency to the authorities. Because when our foundation is built on complexity, we simplify humans by giving up our humanity. Reality check, we've strayed too far from the truth. The world economy's a wreck when 1 + 1 no longer equals to 2. And if life's created from the truth, along the way something got screwed. And we let our own dogma subjectify value. We divorce action from consequence. We defy the law of physics. We make scarcity infinite. We disregard the language of mathematics. So our systems are built in a fallacy. Our society's based in a fantasy. In the absence of truth, we're living in the shadows of our own reality. And that's the root problem. Man-made rules can be broken. As our trust crumbles, so does the progress of our civilization. But one thing remains constant: no one can cheat nature. So why not use it to architect a stronger base layer? The most beautiful buildings engineered based on these consequences. Natural law drives rigor needed to build something enduring, uncompromising on principles that accounts for the flaws. Because when our lives are at stake, the gravity of truth cannot be ignored. So if our monetary systems were designed like structures, it would embody energy and matter, so the money itself matters. An unbreakable limit enforced by costliness of creation ensures the structure holds value for many generations. A rule-based system, governed by maths, builds a transparent ecosystem that can self-error correct. With no one in charge, no words are taken as fact. Only work from computation can actualize truth of timestamps, and like water flowing off a cliff down the path of gravity, computational energy makes time flow one way only. It is this irreversibility which gives value to our money by upholding consensus and scarcity to create one shared reality. Now the map is the territory. Now we're working with high fidelity. Now money is truthfully time and energy bound by finality. Now we have the ability to manifest each of our dreams and build a world that is much more reflective of all of our needs. And that's the purpose of money, merely a tool to shape our reality, merely a function to harness and express individuality, just a way to live freely, just a means for possibility. Because when we build on integrity, we enhance the beauty of humanity. The most beautiful societies are built from diversity of our thoughts that come to life when we're empowered individually. Because when our money tomorrow is worth more than today, we shift from predicting to creating the future ourselves. And when our money grows in value, we grow thoughtful in how we use it. Natural law drives rigor needed to fund something enduring, something truly worth it, something that pushes the sky's limit, something only possible when our real value and consequence exist in boundless virtual dimensions. Imagine potential creations, fueled by monetary life force, lasting for many generations. We will venture into new territories and unleash these possibilities once we learn to embrace the truth of our reality.